Good morning. It's Friday, August 2nd, about 6 a.m. Central Time. Overnight, the precious metals are higher after yesterday's two-sided trading session. You've got December gold up $25 at $25.06. September silver up 60 cents at $29.08. That's a critical level on silver. If you look at the chart, July 25th, you wanted to circle that day. That was the day we were down $1.34, and gold futures since last Wednesday were able to retrace that level, and it's running into some serious resistance at that point. Now, yesterday we did have a two-sided trading affair, and I put it on an intraday note. I'm not sure if that's too much information, not enough information for you guys, but basically gold and silver, they staged impressive rallies coming into the 7:30 a.m. release. The initial claims number showed an uptick, 249,000 claims filed versus expectations of 236. At the same time, we saw non-farm productivity show an uptick while unit labor costs come down. So that basically means that a person's doing a lot more work and they're getting paid less. And that's kind of what the Fed is looking for, kind of a reset on some of these higher paying or overpaid jobs, and it kind of resetting the economy a bit, because if you see people working at the same intensity but they're getting compensated less, it should bring inflation down a bit because of that. So but at 9 o'clock, that's when the reversal occurred. So if you look at the chart of gold, we go up, we peak at 7:30, we make a higher high at 9 a.m., and then from that point we plunge. And it's because of the fact we saw manufacturing PMI data, it saw a decrease. So the manufacturing side of things coming down 46.8 versus 48.8, and an uptick in manufacturing prices. So now it's saying that we're producing less and the cost to produce things is more, and that's inflationary, and it shows a declining environment. So basically, if you look at the CME's Fed Watch tool, and what I'm doing on the metals edge is I'm going to put yesterday's and then today's CME Fed Watch tool so you can see the change from day to day. So yesterday, about an 85% chance that the Fed would cut 25 basis points, 15% chance that they'd cut 50. Now you go to today, 70% chance that they only cut 25, but a big uptick in the 50 basis point cut camp, going up to about a 30% chance. So huge uptick there. Basically, the economy is it's falling apart at the moment, to be honest with you. And today we're going to see another big economic data release. We're going to see that non-farm payroll come out. The expectations are for 176,000 jobs. The previous one was 206. We don't want to see anything crazy, like something like 225, 250, things like that. Market is just not going to know what's going to happen. And I think that you'll see the dollar index go up. You'll probably see gold and silver pull back on that type of news. I'm not even sure what the equity markets would do at that point. So it's getting a little bit ahead of myself here. So I'm probably going to tighten some things up, maybe take a bit off the table on gold and silver coming into the number, just reducing and then playing it a slightly different way once that number comes out so we can digest it. Now, getting into a few other things, we are seeing the sell-off in equities continue to intensify overnight. You saw big tech earnings continue to slide. So certain stocks like Apple, which was better yesterday and in the afternoon session, but it was really Intel continuing to slide. Intel's down like 21%, cutting their dividends, slashing like 15% of the workforce. It's like 15,000 jobs overnight. So big sell-off there. And that's what really sparked this, this liquidation on the equities in the overnight session. Said something like Japan or Tokyo having one of their biggest sell-offs since the global financial crisis, something like that. Don't quote me on it. But getting back into these markets here. So looking at silver, again, yesterday we were able to poke above that 29.08. We got up to 29.29 before having a setback. And then today we're retracing it. So if you look at the scores on the board, you go to futures performance, the one-day performance, the VIX is the highest because of the fear in the market, up 7.6%, and then silver, second best performing commodity, up 2.14. You go on the weekly basis, it's a similar situation. VIX up 15, silver up 3.8, platinum up 3.7, gold up 3.28. Japanese yen, I've been talking about the yen for the last couple months here. They are the ones, I think they are the currency to get involved with, especially if you get a pullback here, about a 50% pullback from the way we look at it on the future side. From the bottom to this recent peak, we ran into some key resistance. We pull back here. I think it gives you a great opportunity to look to add to positions. Now, looking at the gold market, and gold's going to be the interesting one. Because of the fact that gold is neutral trend, today if we can close above this level, we should start to trigger a bullish trend. 25.08, where we're at last, we should close over that 24.82, and then we could start attacking all-time highs in the markets. I did have another quote that going back since 1990, if you look at how gold has reacted after that first interest rate cut, after a hiking cycle, within the first 30 days, we've seen prices rally about 6% on average. Now remember, past performance not indicative of future results, but it is something to, make note of in your market here, and then also in your heads. And then also we do have that seasonal analysis. It's at the bottom of the metals edge where it breaks down from going long on the gold market from July 24th and holding that out into about the middle of August, how we've performed. So you'll want to look at that as well. If you need to get a free 2-week trial of it, we'll put that out for you, no problem at all. So keep an eye on that, the non-farm payroll data. Keep an eye on 29.08 on the silver market. We want to close above there, have a strong finish, and then keep an eye on that gold market above 24.82 and 2,500. Those are kind of your key levels there to watch in order to trigger that bullish trend and continue to get that momentum going. You got any questions, reach out to me, 312-858-7303. Remember, futures option trading does involve risk of loss. May not be suitable to all investors. Good luck, good trading.